Well, first of all, we're not going to have a stronger economy because of more government spending. We're going to have a weaker economy. What they want to do is not pay off the debt, but repudiate it with inflation, which is what's going to happen, which is like a default, only kind of a stealth default. But all the minimum wage does is make it that much harder for people to lawfully be employed. I mean, that's, if you think about what the minimum wage is, it's the rate that a worker must convince an employer to pay him in order to legally have a job, right? Because everybody, sells their labor, right? If you think about each worker is a businessman and he has one product, his own labor, right? And so you go out in the market and you try to find somebody who wants to buy your labor, right? That wants to give you a paycheck and employ you. Well, what do you have to offer? It's, well, what are your skills, right? When you're a worker and you're going to all these various employers, here's what I can do for you. These are my skills. Here's how much value I can add to your organization. What we have to do is free these people from the burden of government. So we need to get rid of their taxes, get rid of the payroll tax, Social Security tax, Medicare tax, get rid of all these rules and regulations that are costing her employer a lot of money that otherwise could have been paid to her in terms of higher wages, but instead it's spent on government regulation. So employers could pay their workers more money if they didn't have to send so much money to the government. But also, you mentioned healthcare. The reason healthcare is so expensive is because of the government. If we got the government out of healthcare, the cost would collapse. The same thing with education. The reason that college is so expensive is because of all these government subsidies. Before the government got involved in healthcare and education, they were inexpensive. And the free market is great at making education and healthcare cheaper. Just like it's great at making cell phones cheaper and computers, it brings down the cost of healthcare and improves the quality of healthcare at the same time. The reason it's not happening is because we have all this government involvement. So get the government out of education, get the government out of healthcare, let the free market bring down the cost and bring up the quality and just have a vibrant free market economy. That is the best thing. What lifts people out of poverty is free market capitalism. All these government promises of more programs and more help, they have never worked. What they do is they impoverish the people that they're trying to lift out of poverty. They make them worse off. That's what happens. I mean, socialism destroys every economy that it infects. It's a disease. If the cost of living goes down, if certain things that I'm buying become less expensive, that frees up purchasing power. Now I can spend money in places that I couldn't spend it before. And that's going to result in economic growth in other areas, employment in other areas. So we miss out on all that if the government inflates away those gains. But to go back to your first question about why a trade deficit is bad, I mean, in the short run, it's good in that we live beyond our means, right? We get to consume stuff that we didn't produce, right? Like if you individually were running a deficit personally, meaning that let's say you earned $50,000 a year, but you spent $60,000 or $70,000 a year, right? And you got the difference by using a credit card or taking out a loan or something like that. So while you are living beyond your means and spending money that you didn't earn, life is good, right? Because you're buying stuff that you really can't afford, right? But now you're asking me, why is that a bad thing? Well, because eventually you got to pay back that money, right? And how do you pay back that money? Well, that means that you have to actually start consuming less in the future to make up for the fact that you consumed so much more in the past or your present. But now you also have to pay the interest on what you borrowed, right? Because you borrowed, now you got to pay the money back with interest. So the trade deficits are simply a reflection of the fact that we are living beyond our means and we are accumulating liabilities, debts to the rest of the world that have to be repaid at a diminished future consumption. Meanwhile, the people who are running trade surpluses, who are producing more than they consume, they get to take those surpluses and invest them and accumulate real assets in America that may generate income. So at the end of the day, Americans, we become serfs in our own country because we've sold out all of our assets. In order to consume today, we sell out our productive assets to our creditors. and now they own the real estate, they own the stocks, right? And we basically sold all the seed corn, and now we're sharecroppers, right? Or
I see.
we sold off all our farming equipment and stuff like that. So look, this is how countries go broke, right? When America was a young country, we did run trade deficits because we took the money and we invested it. We didn't borrow to consume, but we became very rich, and then we were running huge trade surpluses because we were so productive. And that's how we went from being the world's biggest debtor to the world's biggest creditor. It was because we invested all of our trade surpluses and we became really rich. When countries start running deficits, that's how they become poor countries, because they don't have the assets that would benefit from inflation, or they don't have the type of debt. Because if you take on debt to buy an asset, right? Inflation benefits you by wiping out your debt. You know that from real estate, right? So if you borrow money to buy some rental property, over time, the inflation wipes out the debt. They're not, benefiting. They're going into debt, but inflation is eroding the value of their paychecks. What they're earning is worth less and less and less as their cost of living goes higher and higher. And if they manage to save some money, if you have some poor people and they're not in debt, but they have some money in the bank, in a savings account, inflation is just destroying the value of the savings. Prices don't expand. Right? They can go up, they can go down, but they don't expand. So what is expanding? It's the money supply, right? If you go back and get an old Webster's dictionary and you look up the word inflation, that's how it's defined: an expansion of the money supply, right? Deflation is a contraction. Just like a balloon can deflate, your money supply can deflate. Now, we don't contract the money supply, we keep expanding it. Now, one of the results of expanding the money supply is that prices will go up, right? So that's an effect of inflation, but that's not the inflation itself. So the question that you're really asking me is, when are we going to see all this inflation show up to a greater degree at the supermarket, right? Stuff like that, right? And it's hard to say, right? I mean, we know eventually that's where it's all going. But right now, a lot of the inflation has pushed up asset prices, right? That's also an effect of inflation. Stock market is going up because of inflation. It's not because of higher earnings or a better economy. It's inflation that is bidding up stock prices. The same thing with real estate prices. Same thing with bond prices, or all sorts of collectibles or rare things or cryptocurrencies. I mean, inflation is driving all these prices up. But eventually, all of that inflation is going to go into consumer goods.